The latest consumer price index shows inflation is still up there but cooling.
Prices rose 0.1% last month, but that is slightly below what some economists expected. Prices are up 4% from this time last year, which is the smallest year-over-year increase since March of 2021.
Core inflation, which excludes volatile food and energy prices, was up 0.4% last month and is up 5.3% from last year. That was pretty much in line with Wall Street expectations. Joining us now for more is Lori Bettinger. She's the president of Bank Alliance, a network of community banks. She's also the former director of the Troubled Asset Relief Program. Lori, it's always good to see you. Can you tell us about the Federal Reserve's target for inflation? I believe it was at 2%. Does it seem as if that goal is still within reach?
I think it is still within reach. I mean, as you said, overall inflation, we're down to 4%, which is certainly a big improvement, from when we were looking at months where we were running at 8 or 9%. So we're getting there. The rate of inflation is slowing. We're clearly not quite at that Federal Reserve target, as you mentioned, of 2%, but things are certainly moving in the right direction. Now, as you mentioned, you can look at the report in so many different ways. You noted that often people take out food and energy prices, which, can move around a lot. I always, I find that interesting in a data sense, but for us as consumers, food and energy often consume a really large part of our budget. So taking those out, might not really reflect how we all manage our own household's money and budget. But, this report is moving in the right direction. I think even though there's areas where we can focus, that might not be as positive as others, we're moving in the right direction.
All right, Lori. So the Fed obviously starting their meeting today, and of course, that will determine if they will hike rates again. So how does what today's data presents interface with the idea of whether or not the Fed will take a pause?
Well, it certainly feels like a lot of economists and different participants in our capital markets are expecting the Fed to take a pause. We've heard a lot about that recently. And I don't think that this information, which again would be positive, I think, from the Fed's perspective, even if maybe not quite as good as they would like to see, I don't think that would change a decision to take a pause this week. Because again, with all this economic data, we're always looking backwards. So there's a bit of a lag. At the same time, you're trying to take this action with regards to interest rates, which will always have a lag. It's not like we're going to raise interest rates or lower them and see a difference tomorrow or next week or maybe even next month. So I think that, this information, if, members of the voting committee are looking to pause, this probably helps support the case for, pausing and seeing what happens, getting another month or two of economic data to see, what's really happening here. But I think this is a good sign.
The advice, Lori, goes that you're supposed to spend about a third or less of your income in rent. For my generation, it's about half, if not more. And somehow shelter costs keep going up, 0.6% from last month. Also, used car prices rose 4.4%, which sounds remarkably high. Why are those prices so high?
Right. So two great questions. And, the shelter costs are, again, now they're a very large component of the CPI index overall. So we talked about food and energy being a big component, but now, shelter is making up a lot. The interesting thing about shelters, I think a lot of people are expecting those costs to come down over the past months because of the way they calculate shelter in the CPI, which we're talking about today. There's a lag, and especially when you look at rents and housing prices. So as people start to see rents stabilizing or coming down and housing prices stabilizing and coming down, there's an expectation that in future months that shelter price might finally start to come down. But as I said, we get a lag here. Now, to me, when you look at the used car prices, that's also really interesting. It's funny, I was talking to a friend of mine who has a few dealerships, and I asked him what was going on. He said, the world is upside down, which is probably an answer that works for a lot of questions right now. But I think what we're seeing is over the past couple of years, right, many fewer new cars were being sold. Production was cut back. And that's now resulting in this continued shortage of used cars. And also we're seeing with higher interest rates, buying a new car is more expensive. So consumers are holding on to their new car for longer. Again, that takes potential used cars off the market. So you have these factors that really started in the pandemic now affecting sort of the scarcity of used cars. And that's why I think we continue to see these prices stay high by historical levels.
Fascinating. Lori Bettinger, thank you.